And of course, tough times indeed for the Kenyan entrepreneurs. And we start off a discussion on saving options that you can tap into in 2018. And I'm now joined by the Chief Executive Officer of SMEP Microfinance, and that is Simon Kamore. Many thanks for joining us.
Thank you, Aby.
Well, looking at what we're seeing right there with Kenya Commercial Bank putting out a list of cars that are about to be auctioned, and this will definitely be testament to the prevailing situation where people have defaulted on loans. From a banking side of things, how is the situation currently? Is it a one-off or it's happening across the country?
Aby, this is not a one-off. It is happening across the industry. If you pick any day, you see the list of auctioneers that's out there selling either vehicles or pieces of land that secured facilities that have been advanced from these financial institutions. Mm-hmm. So I'd say we're operating at a season where we have high non-performing loans, and the lenders are out there to recover the money, because this money, again, does not belong to the lenders. It belongs to the depositors. Mm-hmm. So it's a thing that needs to be addressed.
All right.
Yeah.
And picking your mind, Simon, working in the financial sector for a number of years, what would lead someone to default on a loan in a time where we are seeing Kenya is the 5th most attractive country? People are optimistic about the economy. What would lead someone to fall into that hole where they are unable to even meet their financial obligations? Okay,
there are various factors. There are some that could be zeroed in at the personal level. Particularly, there were assumptions that were made at the point of seeking to get the loan, and particularly in the line of businesses, and there are changes in the micro sector or in the business environment where you don't meet your business objective, and the loan was to be paid from the business proceeds. There is bound to be a problem in terms of loan repayment. There are other issues where we find in the market where there was a noble cost when the loan was being applied for. But then we have what we call loan diversion. That is, the proceeds of the loan were utilized for another purpose that is not cash generating. Mm-hmm. So if the purpose was for business and the amount that was borrowed was not injected in the business, it means that business did not have the capacity to repay mm-hmm. the facility.
All right.
And so there'll be a problem in terms of repaying.
All right.
Yes.
And let's shift gears a bit. And for SMEs, one of the interesting reports we did see was the SME Performance Index, yes. which showed that 65% of SMEs relied on funding from savings.
Yes.
Perhaps let's talk about the bigger topic on savings.
Yeah.
As a country, 40% of Kenyans do not save out of their income. Yes. Why is the case?
One of the things I would take is that the way we are culturalized, we are more of a consumption society. And it's something that needs to be reversed in terms of our mind shift. An example, when we were growing up, it's rarely that we were taught to save. In fact, the people who do save or discuss about saving, they see it as a residue or the last item in the budget. Mm-hmm. So you'll get your pay at the end of the month, and it is budgeted. In fact, that money is not sufficient to meet your needs. Mm-hmm. And then so if in our minds we were taught or we have been culturalized to save after we have met all our needs, that means virtually we will not save. Something interesting is that you know that salary is never sufficient. Your needs or somebody's needs shift with the level of income. If somebody is earning 10,000 or the income level is 10,000 today, they'll be able to survive and operate at that level.
Yeah.
But all of a sudden, if that salary moves or the level of income moves to 50,000 Kenya shilling, it is only in the first month that they will see a balance in their bank. By the third month, the 50,000 will not even be sufficient. What changed? It means their level of expenditure and the level of exposure changed and shifted together with the level of their salary.
All right.
So that has to do with the mindset which needs to be changed so that savings becomes a priority.
All right.
Once you receive your pay, whether it is salaried or you are getting your income on day-to-day basis, item number one would be to pay yourself in form of saving.
Sure.
Yeah.
And let's further get your thoughts on this. So if I want to start saving today, are there available savings options in the market? Because the perception is the 7% you earn on a fixed deposit account is quite negligible. And many people perhaps might want a higher margin if they're to save. What can the banking sector do so as to stimulate a stronger savings culture?
There are available avenues in the market. And many financial institutions have various initiatives basically to mobilize deposits, because mobilizing deposits means you're talking to customers. But that is not sufficient because it is out there. It needs to be customized and to be broken down to initiatives that are exciting, understandable, and easy to operate. For instance, the savings accounts are there, the fixed deposits accounts are there, but I can tell you, even with 7%, it is not easy because we are told it is 7% of a deposit. You have to raise some substantial amount for a banking institution to lock that amount and be able to pay you 7%. So we can continue telling people save, 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 but we are not giving them an innovative way that is simple, step by step, to accumulate, even if it is that money that can be placed into a fixed deposit. And of course, there are other avenues that if you have some sufficient amount of money, you can be able to invest even with the government. Like now we have the Emakiba. But I would want to talk about what we are doing in SMEP Microfinance Bank, where we have taken an initiative that has been out there and have been able to customize it and bring it to the doorstep of our customers and Kenyans in the nationwide, where they can be able to pick it and operate at the ease of their seats as they continue with their day-to-day lives and save step by step in a challenging, exciting, and innovative way. We are speaking about the 52 weeks savings challenge. What we've done, we picked an idea that is noble, and we've linked it with systems and processes that are assuring the savers that this is a credible program where we can be able to join together with others who will be challenging us to save week by week until the 52nd week of a year.
All right.
In simple figures that are understandable by members. And we have taken 3 modules. The first one is 25 shillings per week to start with, all 50 shillings per week to start with, or 100. And what we are doing is, the concept is in the first week you shall get or save 25 shillings, for instance. In the second week, you shall save a multiple. You simply multiply 25 shillings, multiply by 2, so you shall save 50 shillings. Now, in the third week, you shall save 75 shillings. In the fourth week, you shall save 100 shillings. If you pick a module for 100, you save 100 shillings in the first week. In the second week, it will be 200. In the third week, it will be 300.
Sure.
And it continues progressing.
All right.
By the time you are on the 52nd week of the year, being 100 in the 100 shillings module, in that week alone, you shall save 5,200. What is exciting is that this program is very challenging. One, it has put you into a program where you are among many others that will be putting you to account. Where are you and what are you doing? Are you still on the plan? So one is that you have to purposely get fixed into the marathon, because it's a marathon. You cannot give up.
Oh, yes.
Your friends will be telling you, hi, why are you giving up? It is double-edged. One way, you have to set aside money, either in terms of budgeting, learning to budget properly. Because the other thing is the barrier to savings that many people don't budget. Actually, they don't know what is budget. They only know budget when it comes to paper.
All right.